Hello and welcome to the next video in the FX Evolution trading course. Today we'll be discussing the topic of head and shoulders and looking at this common pattern and common reversal pattern for how we can trade it, how we can place our stops and take our profits, as well as correctly identifying them on charts. It can be a tricky one to identify, so hopefully we'll cover it in this so you can correctly identify it every time. So let's begin what a head and shoulders pattern is. So it's made up of a left shoulder, a head in the middle, and a right shoulder, kind of like a person's body. It's a common reversal pattern within the Forex and other stock markets, and the formations are rarely perfect in reality, so they can be upward sloping or downward sloping. They're not always perfect. So let's take a look at a perfect one first so we can kind of understand what it should look like. So here we have an upward trending market. We have price making a new high, coming down and breaking a similar high to over here, and then breaking what we call the neckline. So at this point here, we can correctly analyze that this is a head and shoulders pattern. We have our left shoulder, we have our head, and we have our right shoulder. And you can see that in a standard formation, that the two shoulders are the same height. We actually prefer that the right shoulder, or the direction shoulder for where we want to be selling the market or buying the market, is smaller than the left shoulder. And this just simplifies down to we're looking for where the bigger push of money is. And by having a smaller right shoulder, in this case, we'd be looking at more people keenly selling the market and looking to profit from the decrease in price. By trading this, we'd be looking at selling after it breaks the neckline. So just like in a human being, we have left shoulder, head, and right shoulder, and this we'd be looking at selling as it breaks through this neckline area. So let's now take a look at an upward sloping formation. So this is like an imperfect head and shoulders pattern. You can see the price is increasing, creates a left shoulder, a head, a right shoulder, and then we'd be looking at the break of this slope. So this is an imperfect one, and you may not always want to trade these, but sometimes they can be very, very profitable. So we'd be looking for a break of the neckline and profiting from the sell here down. And we can correctly analyze this somewhere around this right shoulder point. We can start to enter our pending orders or keep a lookout on this particular trading pattern. So here's a downward sloping formation. So we can see here price is increasing. Left shoulder, head, right shoulder, draw the neckline. At about this point, we can correctly analyze it and be looking for profiting from it selling off. So let's just cover in brief how to trade this strategy. So we've got the neckline. We look to sell at the neckline with a stop loss above the previous shoulder. So in this case, the right shoulder. We can also figure out a target measurement. So because it's a candle pattern or a line pattern or a pattern within technical analysis, we can actually look at the head length between the head and the neckline and project that distance as our target level. It's surprising how often this works because it's what technically happens, and you're not going to be the only one seeing this. So because you're not the only one seeing this, all of the people with bigger money like hedge funds and banks also trade these patterns. So when they're looking at where they're going to take profit, they'll take profit of the distance between the head and the neckline. So let's now take a look at a target measurement on a sloping neckline, head and shoulders. So we can again measure between the head and the neckline and then project the break to the target level of this distance. For a target measurement of this sloping head and shoulders, be looking from the head to the neckline, and again when it breaks through, this is our distance. So let's take a look at an example in the market of a head and shoulders, and I'm going to pick a particular imperfect head and shoulders so you can see how that may look on your charts. Here we have the Australian US dollar daily, and you can see I've drawn the neckline, and as price breaks through, I look to take the profit between the head and the neckline here. You can see the price did move around this, and there were people taking profits and buyers were coming in at this point. So there were people definitely exiting, and that's sometimes an indication to you were profitable or you were correct with where you put your take profit. The other interesting thing to note about this is that when we're identifying head and shoulders, I like to see a smaller in the direction of trend shoulder on the right. So you can see here this shoulder is smaller than the previous shoulder. So it can signify more sellers coming into the market. So let's now take a look at an inverse head and shoulders. Again, it's made up of a left shoulder, a head in the middle, and a right shoulder. It's a common reversal pattern in a downtrend, and the formations can also be up sloping or down sloping. So here we have a downtrend. We have our left shoulder, our head, our right shoulder, and we can draw our neckline here at this point with the idea of price breaking out and buying up and profiting from an increase in price over time. Here we have our upward sloping formation. So our left shoulder, our head, and our right shoulder, and our neckline. And our downward sloping formation. So our left shoulder, our head, our right shoulder, and our neckline. So how do we trade each one of these strategies? Very similarly to the previous examples, except that this time we're looking to profit from buying into the market and an increase in price. So you can see here that we're looking at buying at the close above this neckline. We'd be placing a stop loss below the previous right shoulder, and we'd be looking at taking profit, the difference between the head and the neckline as our target level. Here we have one of the sloping head and shoulders, buy at the neckline, stop loss underneath the right shoulder, and the take profit from the head to the neckline. Again, the same, stop loss, buy, take profit level. So let's take a look at an inverse head and shoulders example in the market. Here we have a more perfect looking one than before. So we've got the US dollar, Singapore dollar. So maybe not a pair that you're looking at, but it just shows that it works on all pairs. So this is a daily chart, and you can see how price has made the left shoulder, the head, the right shoulder, and how the difference between the head and the neckline has been projected out. And what do you know? It's actually the perfect point where people start taking profit, and if we take a profit here, we would have almost got the perfect price or the highest point in the market before it began its decline after this pattern happened. So I'd just like to let everyone know that for more advanced trading techniques like this, the head and shoulders pattern, please look at signing up to our advanced course, and we also do mentoring and coaching. That's it for today, and we'll see you in the next video.